So today Tesla just hit a new 52-week low, and not just that, but another 17-month low. With so much noise out there, how do you differentiate the signal as opposed to all the garbage that people are talking out there? So I've been a Tesla investor for about six years now, and I want to give some perspective into whether investors are focusing on the right things or just not paying attention. So let's get started. So if you go anywhere or read anything, the first thing that you're gonna notice is that all people are paying attention right now is Elon and Twitter. Whether Elon will have to sell Tesla shares, or whether he laid off 50% of the employees at Twitter, or he's too focused on Twitter and not paying enough attention to Tesla, or whether we should vote Republican, and that pissed a lot of people off today. All I hear is noise. Nobody is talking about fundamentals. Everybody's just very focused on the short-term noise of Elon owning Twitter and what that implies for Tesla shareholders, which is pretty much nothing on a fundamental basis. So yes, it might cause some more selling pressure if he does sell, but we don't even know that yet. So I want to take a little bit of time to just refocus on fundamentals and see where we at this particular point in time, whether Tesla is overvalued or undervalued. So if we look to the fundamentals, so Tesla grew 56% as of the last quarter. Let's see how much they grew on the EPS. Wow, so they just doubled their profits year over year. Oh wow, I don't see anybody talking about that. If you do a little bit of math on the EPS, you'll notice that it will come to 7.78. Some people have $8. Analysts are not paying attention, so they'll have something like 6. So with that assumption in mind, what would be the PE for Tesla if we use next year's EPS? 25 PE. So Tesla is trading at a PE of 25, which would be in line with something like Apple or Coca-Cola, or half as much as Chipotle. We have something called PEG ratio, which is just a PE divided by a growth rate. So if we do the forward PE of the S&P, you'll notice that it's 16. And if you do a PEG ratio on that, it will be a 1.4. So if we assume that Tesla will do 778 EPS for next year, I'm going to post a link to a spreadsheet below. Tesla will have a PEG ratio of 0.76, which means that Tesla is undervalued by half. For Tesla to even be at the same level as the broad market, Tesla's fair value would need to be 363. Now, how could this be? How is nobody paying attention to this, and how is everybody focused on the short-term noise? I have been a Tesla shareholder for 5 years, almost 6 now, and I've seen this happen 3 times. Number 1, when the funding secure tweet happened. All investors talked about and focused on was Elon against the SEC. So that's number 1. Number 2, when the COVID lockdowns happened and they forced to shut down Tesla factory, all investors could think about was how the world was coming to an end and how we wouldn't be able to manufacture any more Teslas and nobody will buy them even if we could. And number 3 is now all people are focusing is on the noise of Elon running Twitter. The 2 previous scenarios were a great buying opportunity. I think this one will be too. Of course, not financial advice, but I have a feeling that in 5 years, we'll be looking at these prices like we look at the funding secure prices and think of how silly were people selling at 197 a share. Thank you for watching. If you found this valuable, please consider subscribing. And until next time.